Free audio post production by alphonic.com.
Hi, and welcome to the weekly recap. So, I'm going to recap the first week of March. So, yeah, I'm not doing the daily recaps because of other professional commitments, and going to stick only with GU, so with the time constraints. So, focusing on one pair with other professional commitments is a smart way to achieve success in trading. So, once I completely transition into a full-time trader, then I can look into trading three or more pairs. But currently, I'm interested in just one pair and focusing on it and then mastering that one pair. So that using that skill, I can apply that skill to multiple pairs. So yeah, starting off with the on Monday, I started off with a losing trade on Monday. So whether it's a good loser or a bad loser, that's up to that's something that we need to discuss, but let's open the charts and see what happened on this day. So, uh, the weekly was actually bearish, and prob- uh, the weekly was actually was bearish, which means most likely we can expect the daily to pause bullish to facilitate the weekly swing pullback. And this is the weekly equilibrium. So this is the weekly equilibrium. So we can expect the price to make daily boss bullish and tap into some weekly supplies before pushing down. So that's the simple weekly and daily analysis. So, and if I see only from the daily perspective, so from the daily perspective, the daily is in the premium and it has mitigated this supply and it has also chalked bearish. So, which means there is a high chance. Suppose if I'm not analyzing the weekly perspective, if I'm seeing only the daily perspective, then from that angle, we can say that price can push down at least to mitigate this daily demand. And then if the price wants to go up, then it can go up to mitigate this weekly supply, or it can just flip this one and come down to take out the external range liquidity. So we are having two options, but for now, the swing structure is aligned. This is a swing structure, and the internal structure is also aligned, which means this low has now become weak, and we can expect the price to take out this external range liquidity. So that was the expectation coming into this week, targeting this weak internal low. So sales was my high probability, mean the go-to trade. So moving on into the 4-hour chart. So in the 4-hour chart, you can see the price. Uh, this is the 4-hour boss bullish and price swept liquidity and boss bullish again. So the in the daily, you can from the daily perspective, this is actually the daily chalk, and from the 4-hour perspective, the internal is bearish, but the swing structure is still bullish, and price has just swept the strong swing low, which means a major liquidity pool has been taken off. So what I can expect, probably a bullish reaction into the supply and then push down, or price can hold this strong low and then push the price up. So for me, the high time frame always holds. So what I can expect, the price to push down and mitigate this daily demand, and then this would be the inflection point whether, and I need to wait for some more confirmation before taking any trades. But for now, this low has been liquidated and there is nothing to the left from high probability demands. So shorts or high probability. So moving on into the H1 chart, and here you can see the H1 is also boss bearish. So obviously what I can expect is continue this bearish structure and take out this weak low. So why I call this as weak low, because this is one straight push up and there is no there would be a lot of sell liquidity here, and this supply has swept liquidity as inducement. Though it has mitigated slightly, I consider this as partial mitigation and it did not mitigate the EQ. So I consider this as an inducement and price has taken it. And uh, there is some internal structure that is forming. So I can expect this internal structure to hold and I can look for the price to take out the weak swing low. But the caveat here is price had just paused. H1 this swing structure is very small and the for as shown in the 4-hour chart, price can bounce bullish in the H1 just to mitigate the 4-hour supply, and then it can push down. So if that happens, then that would be a failed trade. Suppose if that does not happen, then it would be a profitable trade taking out the sell side liquidity. And you know the result because you already told it. Yeah, this is M15 where look, price has mitigated the supply already, and immediately after the Asian is done, the start of the London, I mark this as a 15 breakout structure, and this is the current internal structure that is holding the price. So mark the 61.8 level right here, and once the price 61.8 level, so this would be my mitigation candle. So I placed my stop order just below and stop loss order just above, and just waited for the odds to play out. That's it. Yeah, price gave a strong reaction down. So if the price came further down, so that would have been a break-even trade for me, and it would not been ended up losing trade, but it just gave me some fake reaction, and price ended up pushing massively upward and creating a perfect LC2A, but I'm not interested in this trade because once the POI, because you can see multiple mitigations of this POI. So since the this POI has multiple mitigations, so it's likely to fail. So yeah, this is how I ended up the losing trade. I can consider this as a good loser because I took this with logic and there is no FOMO trade. But could have been a bit logical because the price took out the strong swing low. So there should have been some bullish reaction after the price taken out some strong sell side liquidity because this low was formed via sweep of liquidity. So this is a very strong low. So if this liquidity, if this low is being liquidated, then there is a lot of sell side liquidity has been taken out, which means price can give a solid reaction to at least to this supply. So from that angle, it was a good trade. But when you come into the H1, it was very tempting. Yeah, I marked the market structure, the swing structure of the H1 very aggressively, but even then, it was a valid trade for me. And yeah, um, the there was some sell side liquidity to target as well. Of course, that was one straight push up. So, and yeah, once the price was bullish, so I was expecting the price to come mitigate this demand and then target this 4-hour supply above. Yeah, that's the end of the day. No. After this price, I'm not sure whether the price came and mitigated it or not, but yeah, after this, I didn't trade because that's the end of the London session. So yeah, coming on to Tuesday, the daily swept the internal dense liquidity and the demand is still holding and it has boss bullish. So now I can expect the daily to boss bullish and mitigate the weekly supply. So now it's very clear that though the price has reached the premium prices, it is still demand is still holding and there is not much of supply to push the price down. So I can confidently expect the price to take out this strong daily high and mitigate the weekly supply above. So from the H4 perspective, A price liquidated the 4 hour swing high. So the same pattern again repeating. So liquidation of the strong internal highs, I can expect some pullback. So this time I was aware. So I was looking for sells as valid as its demand as high probability to form the higher low. It is formed via sweep of liquidity and it does not have inducement, but still with a strong momentum. So looking for sells is valid to play the pullback, but if the price forms, something like this, you know, forms some and sweep of liquidity and then push up, then I'll be looking to trade from this POI. So that was the plan, and as expected, price did the same. So price, instead of making that strong shift down, it has chalk bearish, but this push down is not what I consider the most convincing. So I was expecting the price to push, chalk bullish. So once the price chalk bullish, then I would be looking for longs because of that pattern. So yeah, as expected, uh, yeah, here you go. The price chalk bullish. I think this is around. Uh, Let me open the chart again for you. So I think that's on March 4th, right? Okay. 5th of March. Yeah, here you go. This is the trade. I actually didn't take this trade because it happened during the London lull period. So let me explain this one. So, and by the way, it's a break even trade as per my entry strategy, but yeah, it's a valid trade after all. So yeah, price liquidated price liquidated this low. So here you can see. So if I so this is the liquidity sweep. So once the price liquidated it and it made a strong it made a chalk bullish. So once the price chalk bullish, then I was confident that the high is weak and it's going to be taken out. So this was the POI which I expected the price to mitigate, and it mitigated, but the mitigation was at 10. So if I jump to M15, here you can see valid LC1. This is the M15 lid, and you can see the liquidity candle get mitigated at 10:15. So that is London lull, and I don't trade on London lull. So if you didn't keep any displacement buffer or stop loss buffer, then this would provide you 2.8 hour. And if you target the 2.5 hour like me, that would be a winning trade without displacement buffer and stop loss buffer. But if you have some displacement buffer and a stop loss buffer, so what I mean by displacement buffer and a stop loss buffer. So this would be my stop level. So this is 120. I'll 1 pip stop loss. That would be 130. And I will not enter at the edge of the candle. I'll give 1 pip displacement buffer. So I'll make this as 140. So this is my entry, 1 pip above, 1 pip below. And if you see, I got 2.3. So but my fixed R is 2.6. So this is definitely a break even trade. So why it's break even trade? Because I go to break even once the price reaches 61.8% of the uh, entire range. So at this level, I would have been break even, but I hadn't take this trade because it was during the London lull period. So this is not of you know not of use talking about this non-taken trade. So yeah, supply failed and the demand took control. So this was a valid demand, but I didn't take this trade because it actually failed and there was no entry here. And after that, yeah, just saw the 4 hour how it was forming. So there is a lot of chance price coming down, pause to sweep out the internal range liquidity, and you can see strong rejections coming up, and none of the candle closed above this high. They all liquidated the highs. So that's a very good chance that the price can come down to seek some internal range liquidity. So actually, this was end of the day, 14.05. Only one candle was left. So yeah, 14, no, almost the end of the session. So yeah, that's it from March 4. Yeah, March 5th. Again, there is no trades, and yeah, price took out the external range liquidity of the daily as expected. And from the X4 perspective, there is price took out the buy sell liquidity, and there is some sell sell liquidity to be taken. So shorts are high probability today, but I can see this demand can still hold and push the price further up to mitigate this weekly supply, and it can create a series of low resistance liquidity structure, probably like this, and small structures, and all this becomes a low resistance liquidity for the price to just take out everything, all the buyers, all the trendline liquidity, trendline buyers, and then get them all, mitigate this demand, and then push the price further up. So that's one more possibility. Moving on, yeah, this is the H1 chart, and this is actually end of the day session. End of the day, so I didn't make much of the session updates because my day was tightly packed. So actually, actually checked the charts 3 to 4 times, but there was no time for me to make any session updates. So what happened is, after the H4 was bullish, H1 uh, continues. H1 again was bullish. Why I mark this as was bullish? Because this was a strong low as it swept some liquidity and then pushed the price up. So I expected the price to mitigate this demand out of flow at least. So that I was expecting price to mitigate this one. This if the price mitigated this extreme, I was actually planning to take direct M15 LC models. Suppose if the price mitigated the 4 hour demand, so possibly an H1 chalk bullish would do for me to look for longs. But unfortunately, price didn't do anything. So it was a straight push up, and there was no trace on this day, and the price mitigated the weekly supply. So here you go. On March 6, again a losing trade. So let's analyze what happened on this day. So price clearly was bullish on the daily, and it has mitigated the weekly supply. So now the longs become slightly low probability, but with strong H1 confirmation, you can still take longs. So this demand still holding the price. So if the price mitigates this 4 hour demand, I can look for some H1 confirmation, and then I can look for longs. But I can also look for shorts, expecting the price to push down to make the 4 hour pullback. So I can also play this 4 hour pullback, expecting the price to mitigate this demand. So let's see what happened on this day. So this was set up beautifully. So here you can see all I expected is the price to take this Asian eye. So once the Asian eye has been taken off, so once the price takes the Asian eye, and again after taking the Asian eyes, I expected the price to chalk bearish. So once the price chalk bearish, I can confirm the liquidity sweep, the displacement. If these two are aligned, then I can confidently take the trade provided there is some up, you know liquidity to target. So in this case, this was the 4 hour demand which I can target, but before that it was having a beautiful inducement. So my target was not this 4 hour demand, my target became this H1 liquidity. So it it's actually a beautiful setup, but unfortunately it ended up as a loss. Price took the Asian eyes, chalk bearish, and then this was a beautiful POI from which I can look for shorts. And yet, yeah, you can see the rejections coming off, and there is sell side liquidity. There is some, and the price is still in the premium, so price did not reach the discount. So there is some room for me to look for shorts. Everything was aligned. Actually, this is what I call a high probability trade, and the prices also mitigated the weekly supply minded. So everything is aligned, something that I call a high probability trade. And look what happened. So LZ model also played out, and even in the M15, you can see the price had mitigated this refined M15 POI. It took the buy side liquidity, and it was having this low resistance liquidity to target. So both M15, H1, 4 hour, daily, weekly, all the time frames coming together to give me this beautiful setup. But even the most highest of highest probability trades fail, and this is a perfect example of that. So price ended up consolidating. Initially, price gave me a strong reaction, but the demand took control. The buyers came into the picture suddenly, and there was a clash between the buyers and sellers. So price didn't move anywhere. It started to consolidate, and people like me got stopped out. So yeah, that's the analysis for Thursday. That's how I got stopped out. That's how it became the second losing trade. But this was much more high probability than the first losing trade. So this was on Friday. The daily structure is still the same. I'm expecting to play the shorts, the daily swing pullback, and moving on. The H4 still it's consolidating, it's building liquidity on both the sides. But my primary target would be to focus on this demand, because with the sell side liquidity, price can take all the sell side liquidity and push down, mitigate this demand, and whether it flips this demand and then pushes further down, or it indicates this demand and push the price further up, that's a different story. The short term target would be to target the 4 hour demand, and also from the H1 perspective, there is some sell side liquidity that we already saw. So targeting that sell side liquidity also makes sense. And yeah, this was the sell side liquidity, and here is also some low resistance liquidity for me to target. So what I expected is, so there is some buy side liquidity above. So I expected this pattern. So once the price takes out the buy side liquidity and chalk bearish, so again the strong demand, I can look for the demand to be mitigated and at least target the sell side liquidity. And even though that would not be sometimes 2.6 hour, I can break even my trade and allow you know let the odds play out. Suppose if the price wants to flip this demand, that's a different story. But once the price takes the sell side liquidity, then there is high chance that the price can reverse and take out my stops. So that's the point where I will break even my trade. Even if it is not 0.68, I'll break even my trade. So sometimes we need to be discreet, right? So yeah, this was his setup actually. And what happened? Price made a boss bullish. So I was thinking whether to make this as a boss bullish, because I'm not particularly a big fan of this low, because this low did not sweep any did not make any liquidity sweep trade and then a push up. So there is obvious chance that this strong low would be taken out to at least to mitigate this demand. So for me, so this is the valid swing range. So this is the valid swing range for me. So this is a temporary inducement kind of thing. But since I marked this as my 4 hour, uh, you know, 4 hour swing structure, so I just want to differentiate between the H1 and the H4. So that's why I did not, you know, I mark this as my H1 swing structure. But I'm well aware that this low might fail and this demand might not hold. So if even if the price mitigates this demand, I'll be waiting for the price to chalk bullish before taking longs. So I can at least I can look for that pattern. So what's that pattern? So swing structure, and here the price chalks bullish. So which means I can a fresh demand to trade from, and this high would become weak because the swing and the internal loss is aligned. So that would give me an extra edge uh, for the trade to play out. Right. So that was my plan, and you will come to know like how the FOMO kicked in when unfortunately it was I didn't take the trade. So sorry, not unfortunate, fortunately. So yeah, I just moved to M15 and I saw that there was a fake break liquidation, and we pulled back into investment. So buy sell early, there was a large bullish candle, so early buyers could be trapped out and their stop losses were taken out. So I was planning to enter when the price mitigates this POI, but fortunately it did not mitigate because it was against my plan. Because why it's against my plan? Because I had to take and confirmed entry. Why I need to take a confirmed entry? So M15 LC2 LC2AS will work only if there's an edge. Only if I know that the price is going to go in one direction. So LC2 model M15 that low time frame entries won't work in random places, right? So in this point, two things are bound to happen. So either price can respect this demand and continue going up, or it can flip this demand and then push further up to take out all the sell side liquidity here, mitigate this extreme demand, and then it can push up. So this is just an inducement zone, right? So taking and timing and low time frame, using a low time frame to trade a high time frame swing structure, you know, we need some confirmation from the higher time frame itself before entering into the lower time frames. So I made a big mistake. So thankfully I did not get any trades on this day. I mean, the price did not mitigate the POIs, fortunately. So that's how I just escaped from another losing trade. So these are the lessons that I must implement in the coming days. Yeah, that's it from this week. See you guys on the next week. So probably there will not be any daily recaps from now because of the time constraints. And yeah, this weekly recap is pretty much straightforward, and I'll be providing all the information within this 30 minutes deadline. So yeah, again, thank you guys. See you.